Anybody have any questions? Yeah. Okay, very good question. Where to invest, right? So there's a lot of different options. So now, here's the thing. When we're talking about like that 10% stock market, here's the thing. Here's what I want you to look into, right? I want you to look into index funds. Index funds. I want you to research. Because look, here's what you don't want to do. Never blindly follow somebody's advice. Always take people's advice and guidance and do your own research, right? Because this is your money and you want to really always understand what is going on, what you're investing. Here's a basic rule. Never invest in something that you do not completely understand, right? So now, I want to walk you through, that's a very great question you asked about what to invest in. So, let's talk about index funds. Index funds. So now, first, what is a stock? A stock. A stock is all the shares in which ownership of a company is divided, right? So a single share of stock means fractional ownership of the company in proportion to the total number of shares. So you can buy a share of Apple, or you can buy a share of any publicly traded, company, right? And then you'll own a fractional share of that company, right? And you get dividends, you have capital gains, right? So that's stock. But now here's the thing: why is investing in stock risky? Is because you're investing in just a single company, and that company could go bankrupt, right? So that's why a mutual fund is safer, because a mutual fund is where you're investing in a fund that is a collection of stocks. And so some of them are performing well, some of them might not perform well, but you're spreading out the money among several different stocks. And so it's a process called diversification, when you are diversifying your portfolio, right? And so with a mutual fund, and one type of mutual fund is called an index fund. It's a type of mutual fund. It's a portfolio of stocks. And also, bonds have it too, portfolio stocks or bonds, designed to mimic the composition and performance of a financial market index. All right? So, I highly recommend that you research stock index funds, right? Now, here's the thing. So here's what it is. Stock index fund, so to recap, a stock represents one single company, and the price of the stock is dependent on the performance of that one single company. That's risky. But a stock mutual fund represents a collection of multiple companies, so the price of the stock mutual fund is not dependent on any one individual company, right? There's different types of stock mutual funds. The type that you want to really look into is stock index funds. Stock index funds, because they simply invest in a specific list of stocks that pertain to a specific market index, and therefore they are not actively managed by an investment manager. If you have an investment that's actively managed by an investment manager, that's more fees that can be coming out of that investment. So you want to make sure that there's not a lot of fees, right? And so therefore, the fees regarding stock index funds are lower than the fees regarding regular mutual funds. So now, how to choose the right index fund? How do you choose the right index fund? There's different types. Here's the thing. You want to do your research, compare multiple index funds, right? You Google stock index funds, you can compare multiple index funds, and you want to look at these things in particular. Number one, you want to look at, is there a minimum investment that you have to make to open up the account? Is there a minimum investment? Number two, you want to look at the expense ratio, right? That's important, because maybe the expense ratio might be like if it's like make sure that the expense ratio is lower than like 0.05, right? If the expense ratio is something like 1%, that's very high, right? You want to have the expense ratio be very low. Try to avoid all transaction fees, and the type of market index that the fund tracks. The most popular type is the S&P 500. The S&P 500 index is basically 500 of the largest companies in the United States, right? So that's pretty safe. If you have 500, you're investing in an index fund that's spread out over 500 companies in the United States, right? The top 500 companies, right? So now, how to invest in an index fund? Well, you open a brokerage account. You research and compare several brokerage companies and choose the one that you determine to be the best for you. So like on your worksheet, one of the things that we want you to do is do some research and look at this stuff, right? So like you want to look at a brokerage company. What are some examples of names of brokerage companies that you can look into? What are some examples? Charles Schwab, Fidelity. What else?
In the back of your paper, you wrote it.
Charles Schwab, Fidelity. What's the third one? Vanguard, yes, yes. All right. All these brokerage companies have websites. Also, if you Google them, you can research them. Look at the reviews about these brokerage companies. You want to understand. Remember, basic rule in investing: always understand what you're investing in, right? So, okay, so you open a brokerage account. Now, several, let's see, so you compare them and choose the one that you determine to be the best one for you. Make sure, let's see, okay. All right, and then you invest through your brokerage account. And you set up, and then consider setting up a Roth IRA, which is a retirement account. It's a type of retirement account. Because you want to, it's a type of retirement account where the account's going to grow tax-free. So on your worksheet, two big things to research, right, is Roth IRA, understand how that works, and also the stock index fund, right? And so now you look at like the last question on your worksheet. So you research and you select a Roth IRA. Okay, so you look at the brokerage companies, right? And also within the brokerage companies, there's different types of index funds. And so you want to look at the different types of index funds that are in the brokerage accounts. And also look at the history of it. And look at how much interest has been, like what's the average interest rate of return that these accounts have been generating, right? So to answer your question, that's how you choose, right? You do the research, and really a good starting point is looking at index funds.